Hello and welcome to another accounting tutorial where in this video I'll be running through a bookkeeping controls mock exam. So for this exam you have an hour and a half to complete 10 tasks worth a possible 120 marks, which means with a competency level set at 70% you'll need 84 out of the 120 marks in order to pass. I'll be running through each task and explaining what to expect, how many marks it's worth and how to tackle each question, but if you have any questions just drop them in the comments below. I'll be splitting this guide into two parts, part 1 covering tasks 1 through to 5 and part 2 covering tasks 6 through to 10. Right then, let's get into task number 1. So task number 1 is worth 12 marks and designed to test your knowledge of different payment methods, the purpose of control accounts and the purpose of reconciliations. Let's get into part A then. Organisations use different payment methods. Identify the characteristics of each payment method below by selecting the most appropriate circumstances in which each payment method would be used and showing whether payment methods will reduce the funds in the payer's bank on the date of payment or at a later date. The first payment on the list is a cheque, and we have 6 possible circumstances to select from for when a cheque would be the most appropriate form of payment. Now straight away we can rule out any that say automated because a cheque is a manual payment method. And that leaves us with 3 options. So we have making an online payment to purchase goods. Well, a cheque isn't online, so it wouldn't be that one. We then have making a payment by post to a credit supplier. This would definitely be a strong contender because a payment by cheque would fit this really well. But let's just rule out the last option just to make sure, which would be making a wages payment directly into an employee's bank account. Well, although possible, there would be far more efficient ways of doing that, and therefore the most appropriate method would be option number 5. So next, when would it reduce funds? Well, we have 2 options here, and for a cheque it takes time to clear and therefore would leave the bank on a later date. Payment method number 2 then, which is a credit card. Now, out of those options, the most appropriate would be making an online payment to purchase goods. For each of the others, there are far more suitable options. So let's just select that. So making an online payment. Excellent. Right, in terms of when it would reduce funds, well, a credit card usually takes 30 days until you pay it off. So in terms of when it would reduce funds, that would be at a later date. The last payment method then is direct debit. Now straight away, when I see direct debit, my mind would automatically go to something involving variable amounts. And option number 3 here is making monthly automated payments of variable amounts. So it would be option number 3. Now, just a side note, if it were fixed amounts rather than variable amounts, the best payment method would be a standing order. But for variable amounts, it would be direct debit. And in terms of when that would reduce the funds, a direct debit would reduce the money in the bank on the day of payment. So that covers part A. Now moving on to part B. It is important to regularly reconcile the cash book with the bank statement. Show one reason why regular reconciliation is important. So essentially here we need to pick a reason for doing a bank rec. So reason 1, to check that any discounts received from credit suppliers have been recorded correctly. Well, considering the discounts received aren't recorded on a bank statement, that would definitely not be the reason. Reason number 2, to check for errors on the bank statement or in the bank column of the cash book. Well, that seems far more plausible. Part of the process of doing a bank reconciliation would be to make sure that the two match up and that there were no errors between the two. Let's just make sure the other two options don't apply. So reason number 3, to check the total amount of cash sales has been recorded correctly. Well, cash sales are definitely not going to appear on a bank statement, so that will be a no. And lastly, reason 4, to check that credit customers have paid in accordance with agreed payment terms. Well, unfortunately, the cash book and bank statement don't give us that kind of information. We wouldn't know without going into the account how long the payment terms are or when the amount was due. Therefore, I think we can conclude that option 2 would be the correct reason. Moving on to part C then. Some errors in the accounting records will cause an imbalance in the trial balance. Show whether the errors below will or will not cause an imbalance in the trial balance by clicking on each left-hand box and then the appropriate right-hand box. You can use each right-hand box more than once, and you can remove a line by clicking on it. Okay, so for this one we need to determine whether the error on the left will cause a difference between the two columns in the trial balance. First one then, sales have been recorded correctly in the VAT and sales ledger control accounts but debited to the sales account. Well, considering the entry to the sales account should have been a credit but they've debited it, that would cause the debits to be higher than the credits, and therefore, yes, that would cause an imbalance in the trial balance. So we can select the box on the left here and then select the box on the right over here. Next, the purchase of a computer by Bax has been credited to the bank account and debited to the office expense. So the error here would be more than likely that a computer purchase would be debited to computer equipment, but instead it's been put to office expenses. Both accounts increase with a debit, and there is nothing to suggest that the debits or credits wouldn't match up here. They've just more than likely selected the wrong account to put the computer to. Now, because the debits and credits are equal, there's also been a debit and a credit entry, that would not cause an imbalance. So let's select that. There we go. Number 3 then, cash drawings have been debited to the cash account and credited to the drawings account. Now here we have an error because the entries to record that transaction should have been the other way around. However, because there has been a debit entry and a credit entry, and it doesn't say anything with regards to uneven amounts, it wouldn't actually cause an imbalance to the trial balance, because mathematically, although they're in the opposite sides of the accounts, the debits and credits would still add up. So that would be not causing an imbalance. Number 4 then, VAT on petty cash payments has been recorded in the petty cash book only. Well, this is what we'd refer to as a single entry transaction, which means we've only had one half of the transaction entered, this being to the petty cash book. Because there's no opposing entry, that would cause an imbalance because our debits will be higher than our credits. So we can select that and will cause an imbalance. The last one then, discounts received from credit suppliers have been omitted from the accounting records. Well, if the transaction was completely missed from the accounts, that would certainly not cause an imbalance because there's been nothing entered into the account at all. So although it's an error, definitely not one that would be picked up by the trial balance. Excellent. And that concludes task 1. Nothing too bad there, I don't think, fairly straightforward. So let's get straight into task 2. This task is worth 12 marks and is designed to test your ability to prepare journal entries and record payroll transactions in the general ledger. Let's jump straight in then. A small business uses a wages control account to record its payroll transactions. These are extracts from the payslips of the 2 employees for the month of July. So we can see that we have 2 payslips, one for J. Moore and one for P. Matin? Who knows? Anyway, doesn't matter. Show the journal entries needed to record the wages expense, the HMRC liability, and the pensions liability. Basically then we have 2 payslips and we need to enter the information from both into our accounts using journals. The first of which is to record the wages expense. So remember that the wages expense is the full cost to the business of employing these 2 members of staff. To calculate the value, we therefore need to take the gross pay for both employees and add on the employer NI figure for both employees. We do not need to add any of the other figures in because they're already included within the gross pay figure. It would therefore be 2,000 plus 1,976 plus the employer's NI of 182 and 178 to give us a total expenses figure of 4,336. Now to record this, we debit the wages expense account and credit the wages control. So let's select those from this drop down. So we should have wages expense and wages control. There we are. Right, okay, let's just scroll down slightly here as well so we can see this. And what we want to do is we want to debit the wages expense, again for the full value, so 4,336, and we want to credit the wages control, again for 4,336. Moving on to journal number 2, which is the HMRC liability. This will consist of income tax and NI contributions from both employee and employer, as both need to be paid across to HMRC. It would therefore be 225 plus 158 plus 182 for the first employee, and then add on 218 plus 152 plus 178 from the second employee, which gives us a total liability of 1,113. To record this, we need to debit the wages control and credit the HMRC account. So let's get those in. So we'd have the HMRC and we'd have the wages control. Now what we'd do is we would credit HMRC for that full value, so 1,113, and debit the wages control, again for 1,113. The last journal then is to record the pension liability. So the pension liability will include the employee's pension. Now, just a side note here, if there was an employer's pension as well, we would need to add that in. But because we've only got the employee pension, all we would do is add the 2 together. So it would be the 100 plus the 98 to give us a total of 198. And we can record that as, hopefully we have a pension one, yes we do, and the wages control. Okay, and again, it's a credit to the pension account because it's a liability. We'd need to pay that across. So that's 198. And for the wages control, again, it's reducing that. Just as a side note, the wages control is what we call a holding account. So we put this 4,336 in on the credit side, and then we basically take it all back out again. So let's just enter that 198 in. There we go. And that covers task number 2. Slightly harder than task 1 in the sense that you'll need to remember what to include in each account and which way the double entry goes, but Please be aware that the double entry does not change, so once you've learnt which way around the entries go, you should be absolutely fine. Moving on to task 3 then, which is worth 10 marks and is designed to test the preparation of journal entries to write off irrecoverable debts. You can also test the preparation of journal entries to record opening entries for a new business. Let's get into it then. A new business PR product is being started and the following transactions have taken place. The owner has invested £15,000 in a business bank account and office furniture of £3,780 has been purchased using the business's debit card. A then prepare journal entries to record these transactions. So the first one on here is to record the journal to record the owner's investment. To do this, the two accounts will be the capital account. Let's just select that. And the second account would be the bank. It would then be a debit to the bank as it's money in and a credit to the capital account to show how much money the business owes back to the owner. So let's get those in. So it's 15,000 and 15,000. It's worth noting as well, because I have been asked this a few times in the past. In your book, potentially it mentions around putting or traditionally putting within a journal the debit entry first, followed by the credit entry. Traditionally, yes, that is the case. However, it makes absolutely no difference at all. You will not be marked down for it in the exam. So overall, it's not something that I would spend too much time worrying about. On to number 2 then, the next journal. So this one is to record the purchase of office equipment. So the two accounts involved here will be the office furniture account, which we can select. And as it was purchased on the business debit card and not credit, it would have come straight from the bank account. So your second account should be bank. You would then want to debit the office furniture account for £3,780 and credit the bank for £3,780. So office furniture is an asset, it increases with a debit, and the bank is also an asset and therefore increases with a debit, but equally reduces with a credit. That covers part A of task 3, on to part B then. This is an extract from a sales invoice issued after the business started. The customer has now ceased trading, owing £520. Complete the partially prepared journal entries to write off the £520 in the general ledger. So on this, we can see the debit and credits have already been entered. So all we need to do is select the account from the drop down that needs to be debited and the one that needs to be credited. Now, irrecoverable debts are an expense and therefore a debit. The credit entry would then be entered into the sales ledger control to reduce the balance owed from the business's customers. So the two accounts then will be irrecoverable debt and the sales ledger control. And that covers task 3. Again, nothing too painful there. And with that in mind, let's jump straight into task 4. So, welcome to task 4. If you've realised that we are zoomed in a little bit more here, just a word of advice. If you are zoomed out a little bit far when you're doing this AAT mock, the numbers on the right hand side will crunch up and you can't actually see them. So if that's happening to you, just to let you know, you just need to zoom in slightly and you will have to maybe move backwards to 1.3 or 1.2 or 1.1, whichever one you want to go to, and then come back to 1.4 to actually refresh it in order for those numbers to show. If they show as they are on this screen right now, then you're absolutely fine and no need to worry. So let's get into task number 4 then. So this task is worth 10 marks and is designed to test the preparation of the VAT control account. Now, I have done a separate specific video where I run through in detail the VAT control account, which I'll link in the description. So we will move through this one without a huge amount of explanation, just because, as I said, I've already covered that within a previous video. So I'll show you how to fill this out. But in terms of a deeper explanation, please go and watch that if you're not sure. Anyway, let's get into the question. At the end of June, the debit side of the VAT control account totaled $4,316 and the credit side totaled $1,942. The VAT control account for July is being prepared. Complete the VAT control account by placing the entries on the debit or credit side. Now, just bear in mind that the debit side is higher here, and therefore the balance would be brought forward on the debit side. So technically, the VAT control can either be a liability, which it usually would be where we owe HMRC money, but it can also be an asset, which would happen effectively when our purchases outweigh our sales, which is quite rare, obviously, because most businesses want to make a profit and therefore would sell more than what they buy. However, it is definitely possible. Now, if that was the case, as it is here, the debit side is higher than the credit side. So that balance brought forward will be brought forward onto the debit side. Then the VAT refund would go on the credit side. So the entry for this would be to credit the VAT control and debit the bank as it's money coming in. Then cash purchases would go on the debit side, cash sales on the credit side. Discounts allowed is an expense and therefore would go on the debit side. Discounts received, classed as income, go on the credit side. Purchases would go on the debit side. Purchase returns would then go on the credit side. Sales would go on the credit side. Sales returns on the debit side. And that covers task 4. I appreciate I've not gone into huge detail there as to why each of those goes on which side, but like I say, please watch the other video and that will explain that in full. Anyway, let's jump into task 5. Moving to task 5 then, which is worth 14 marks and is designed to test the preparation of sales and purchase ledger control accounts. This task also requires you to total the individual ledger account balances and reconcile the total with the balance of the appropriate control account, identifying reasons for any differences. Definitely a little more to this task, but let's jump in and see how we get on. These are the balances in the purchase ledger as at the 1st of July. The balance of the purchase ledger control account on the 1st of July has not yet been recorded. The account has debit entries amounting to $29,644 and credit entries amounting to $67,522. Let's start then by calculating the balance on the purchase ledger control account. And to do that, we'll take the information in the question, which states that the debit entries totaled $29,644 and the credit entries amounted to $67,552. Therefore, the balance on the purchase ledger control would be the difference between these two figures. So if we do the difference between those two, that would give us a balance of £37,908. So let's just enter that in. 37,908. Next, calculating the total of the balances in the purchase ledger. To do that, all we need to do is add up all the credit balances above and take away both the debit balances. So if we do that now, that gives us a balance of $37,431. And we can enter that in, so 37,431. We can then calculate the difference between the purchase ledger control and the total of the balances from the purchase ledger, which would be 37,908, so your top figure here, minus the 37,431, which is this figure here, to give us a difference of 477. So that covers part A, which should hopefully be fairly straightforward, and straight on to part B then. Which one of the reasons below could explain the difference we calculated in part A? Let's look at each reason then and see if it could have caused the difference. But first, just a key point, before we look at the potential reasons, the balance on the purchase ledger control is 477 higher than that of the purchase ledger account balances added together. Now that is absolutely essential when we come to look at these possible reasons. So effectively what we're looking for is a reason that could have caused the purchase ledger control to be too high, or a reason that could have caused the purchase ledger balances to be too low. First possible reason then, goods purchased were entered twice in a supplier's account in the purchase ledger. Well, if goods purchased were entered twice in the purchase ledger, that would cause your purchase ledger balances to be too high, which they aren't, they're the lower figure. So that can't possibly be the correct reason. Second reason then, the goods returned were entered twice in the purchase ledger control account. Well, considering the purchase returns lowers the account balance, if that were true, that would have caused the purchase ledger control account to be lower, which it isn't. So again, it can't possibly be that one. Third possible reason, the discounts received were entered twice in the purchase ledger control account. Well, this is very similar to the reason we've just discussed above. So the discounts actually lower the account balance. So if that were true, that would have caused the purchase ledger control account to be lower, which again, it's not, it's the higher of the two figures, so it can't possibly be that reason. Which just leaves us with number 4, so we hope that this one's correct. A payment was entered twice in a supplier's account in the purchase ledger. Now, if a payment was entered twice, this would have reduced the balance within one of the purchase ledger accounts by too much, causing the balances overall to be too low in comparison to the purchase ledger control, which it is. So for part B, the reason would be number 4. So let's select that now. Moving on to part C then. This is a summary of transactions with credit customers during July. Show whether each entry will be a debit or credit in the sales ledger control account by dragging each amount to the appropriate column. So effectively what we have here is the equivalent of a T account for the sales ledger control, that we're going to move the transactions onto either the debit side or credit side. Remember that this account shows how much is owed to the business from its credit customers and is therefore an asset. So anything that increases the amount owed will go on the debit side, and anything that reduces the amount owed will go on the credit side. The first one, the balance, will always be on the debit side. It is an asset. You couldn't really have a credit balance unless something's gone dramatically wrong, i.e. an error somewhere, but that balance brought forward or brought down will always be on the debit side. Now, payments received by cheque would go on the credit side. It's reducing the amount owed. Discounts allowed will also go on the credit side, as the business is giving the customer a discount that reduces the amount they need to pay. Goods sold would then go on the debit side, as it's increasing the amount owed to the business. Goods returned would then go on the credit side of the account, as it's reducing the amount owed. Payments received in cash would go on the credit side again, reducing the amount owed. Irrecoverable debts would also go on the credit side. This is where we've written off the debt as we believe it will no longer be received. And this may happen, let's say, if a customer went into liquidation. Then lastly, journal debit to correct an error. Well, the clue is kind of in the name here. If the journal is a debit entry, that would go on the debit side of the account. And that covers part C. So let's move on to the last part, which is part D, which looks like it follows on. So what will be the balance brought down in the sales ledger control account at the 1st of August? So all we need to do for this is total our debit column and total our credit column, find the difference between the two sides, and that will be the amount. So if we quickly add up the debits and take off the total of the credits, that gives us a balance of 51,354. So let's enter that in. Now, our debit side here is higher, as we would expect on the account, and therefore the balance on the account would be a debit. And that wraps up task 5. So let's now move straight on to task 6. Now this is the start of task 6, but we will run through this along with the rest of the tasks in part 2 of this video. But I hope you've enjoyed so far. I mean, enjoyed is probably a stretch, but I hope you found it helpful so far. And remember, if you do like the video, then like the video and subscribe to this channel, where I will be bringing out further videos on mock exam run-throughs and just general AAT help. Thank you very much for watching part 1. I'll catch you in part 2.